Hey everybody, welcome back. Sive Morten is here with the ForexPeaceArmy.com. As usual, we have prepared a weekly report on the Forex market, but with the tradition that we have, usually we are considering not just some particular market, but take a fundamental picture that actually explains our expectations and how in general it impacts on the Forex market itself. So this time we are focused on really big driving factors. So as I explained for the previous week in the daily updates, that markets in general stands in tensions. So we have liquidity issues on the stock market in the United States system. United States Treasury somehow doesn't spend the money on its account with the Fed that have been accumulated during the shutdown. Something is going on with Japan. Somehow the new prime minister is following with a Donald Trump trend, who asked or maybe ordered her to keep rates low, start stimulus in the economy, just to not provoke the sell-off in the United States market, to keep carry going. So here might be different interests of different sides in the current situation. I am not excluding this the option or scenario where actually it might be intentionally made. But who is doing this? So it might be particular Donald Trump administration and use it for making pressure on the Powell, for example, keeping money on accounts, not spending in it, triggering the liquidity problems and pressing on the stock market to force Powell to cut rate. Or it might be Democrats' tricks who would like to down the Donald Trump. His rating already stands relatively low, around 40%, but as you understand, crash of the financial markets at the Thanksgiving and the Christmas, it might be really the final point. So it's really big game right now stands. And in the current circumstances, there are all these triggering factors, all these factors have the one special feature. All of them supportive dollar. Why? Because collapse on the stock market means demand for the dollar to plug the holes in the margins. You already see what's going on in the Bitcoin and all other assets. Whatever Japan will do, it also will support the dollar, because actually unwinding of the carry trade immediately will trigger the sell-off of the United States assets, which is mean also demand for the dollar liquidity in a moment. Yes, the later situation will change, but at the first moment, it once again will be demand for the dollar. If Japan will follow the inflationary way, just leave along the inflation, it will keep going. The safe haven status also will be under question, and investor will start searching for some safe haven, which is also might be support the dollar in the short term. And actually, you already see what's going on in the Japan yen, for example. So we come to the conclusion that currently in this situation, where lots of risk stands on the table, and they have the common feature of the dollar support, it's very difficult to expect some explosive rally, or at least even the continuation of the existing tendency on all other markets. For instance, fundamentally, euro has reasons to keep going higher, but right now it stands under pressure of the short-term fiscal technical, I would call it as a technical issue, that keeps constant demand for United States dollar, and that doesn't let euro to just follow the fundamental valuation. So, and it could last until the two moments. Either liquidity will be provided by the United States Treasury and everything starts normalizing, or if markets will collapse, we will see the huge spike on the dollar, huge rally on the dollar first, but then everything should come down and turn back to the fundamental driving factors. So that's what we have currently. It means that in the current situation, it's very difficult to expect some significant upward action on the euro currency. Yes, we could get here and there some intraday performance, but mostly euro right now stands on some pressure. So from that standpoint, even by looking at the technical moment, I do not see any reasons for us to consider taking any long position, because nominally on a daily chart we're bearish. So we have bearish context, we have bearish MACD. We do not have any clear bullish patterns, neither directional nor some classical bullish patterns. Which we could get is actually 3 drive pattern. So currently I do not see any reasons to actually cancel this. Let's keep watching for this particular pattern. On the intraday charts, on the 4-day frame chart, market has dropped as we suggest on Friday. It still stands inside of this consolidation where it has returned after the breakout, which is also bearish pattern, bearish sign. The only bullish things that we've got recently is multiple bullish grabbers right here, but they have very small potential. So its minimum target stands above this top. So market could return it back up briefly, touch this area, and then keep going lower. That's the possible scenario. That's why in the current circumstances, we mostly keep the same plan that we had on last week, at least in the last 3 days. On the hourly chart, you could see that our wedge pattern that we discussed, if you remember, this was the wedge pattern that we discussed, was broken really fast. Market was not able to complete the minimum ABCD retracement here. It was not able to reach the confluence area. So it just collapsed. But with the grabbers that we have here on the 4-day frame chart, some sign of the divergence, we could get some actually pull back to the 1550, 1560 area. If this really will happen, that will be great chance and good point to consider taking the short position. If, of course, the fundamental background will not change. If we will not get any additional external information that could change everything. If everything will stands as it stands right now, to keep all other things equal, as we usually tell, that will be our basic scenario. And then we will see what will happen. We will take position here. If market start dropping and these potential hand shoulders will start failing, that's great. It means that we are going with a 3 drive on the daily, right? Our nearest target is around 1420. If somehow hand shoulder starts forming here, promising deeper retracement, it also will be okay because our position will be protected. So we will not risk too much with this situation. I think that we could start with this one, and then just we will see what will happen next.